Hi, folks. Welcome back to Synthetic Sundays episode. So make sure you subscribe, like, and comment below what you want to see next. So, as usual, what we always do is to show you the trade setup that I took, and afterward we analyze it together, right? So look at here. Look at what you got here. So this is volatility 50, 1S. Look at the sniper at the enter, guys. And this is based on the same model I shared or concept I shared, I think 2 weeks ago, right? So the thing is that this thing is repeating every day. So you just have to stick to once and master what you want to, uh master what you want to master. So that is the basic logic about this market. So guys, let's dive into it. This is 30-minute time frame. Look at the sniper into here. So 15 minutes, look at it. So this is 5 minute setup. So now let's go back to the what chart, and I will show you exactly what I was looking for based on what we taught on the first episode, right? So see you guys. Yeah, welcome guys. So this is obviously what the models is all about. I told you that my trading is based on a concept I call algorithm price delivery. So how algorithm books price. So that is my major approach in the market. And look at it, guys. So this strategy is called the 3Ls models. And we only need three things, guys. So we need the first one is key candle. Second one, that is mid time frame liquidity. That is lower time frame, that is liquidity, right? So and time, which is very important. And in this episode, I coupled what the time with what and I annotated with this 3 1 2. So 3 means at that time the pair we are trading, or volatility indices in this case, would be what highly what volatile. So it's rating from what 3 down to 1. So very volatile, 2 is volatile, and it's not that volatile. So we want to trade what a time that the pair or indices we are trading has what volatility. So that is essence of what time. And this time we're seeing here is based on New York local time. So go into your chart, look at it here. So set your time to what New York local time. I don't want to hear anything. So let's go into the model. So like I explained on the first one, I talk about what a key candle. You should all know. If you don't understand the key candle, you should go back to the previous video. The link will be on this description of this video, or I'll pin it or at the top of this video. Just go there and watch the first one, because I'm not going back to explain this concept, right? So let's go to what higher time frame. So as we trade, our trade are always from a higher time frame, right? So key candle from the what first series of this video, I told you that key candle is a candle that is standing alone, right? So if you have this, I can mark this low of these candles, because this is yesterday's trade I want to explain. So then here. So I told you that if I have a key candle like this, look at here. If you have a key candle like this, so we know already that there is a likelihood, 60% chance that the next candle will go lower. We know like this, right? So what you are looking for in the lower time frame is very simple model. You want to see something like this. Build up of liquidity, then we take out that high, then price continue to. This is the simple model that we see, that I explained previously, right? So look at it, guys. Look at it here. So let's say we have our key candle here. So the next one is what? According to the model, right? So the next one, where is it? Is what? Lower time frame. That is mid time frame of liquidity. So me, I'm using 15-minute time frame. I think you can hover over to 15-minute time frame. So guys, on 15-minute time frame, what do we want to see? We want to see what? A build-up of our liquidity. Then we are entering the trade once price take out that liquidity. So look at the first here. So like I told you, look at it. We have this high, 1, 2, 3. So there's a bunch of our liquidity bill above that high, right? Look at it. So there's what? A liquidity above this high. I'm not a trend line trader. I'm purely what? Algorithmic price delivery trader. So I'm seeing the logic of how the algorithm will send price lower or higher. So exactly as you see on that screenshot I shared earlier, so this is exactly where I entered from. So I enter exactly from here. So from here, once price take out this high, what am I looking for again? I'm looking for what? A lower time frame entry for me. So and this place at this point, your what? If you are a trend line traders or support and resistance, at this point, your support and resistance, your trend line will work. But at a place where price is building liquidity, so your trend line or anything else you trade will not work. So here, let's take example from here. From 2-minute time frame, let's check what price is doing. As you can see, I take it based on what it changes it to delivery on the 1-minute time frame. So this is exactly where I take this trade from. So once we have this candle, you see this candle here? This is what another key candle for me. So once I have this candle close below this what low of this what previous key candle, right? That is where I enter this trade. Short position. This is where I literally enter this position. Why? Why am I so confident that this trade will as well go lower, right? At least we have a bunch of port liquidity above below here. And this trade did exactly, I think one to eight. So it's obviously 1 to 8 on this trade because I have this bunch of liquidity here. So that is the next target for price. So look at it. Why am I so confident? We have higher time frame, key candle, 15-minute liquidity is taking, and I have what 1 minute change in state of delivery, coupled with what the time. Look at the time here. I told you that okay, let's check the time first. You know how to couple this time with um this model, right? It's very important. The timing is very important, guys. Where is this? So early morning, it's anything from 7 a.m. to what 11 a.m. New York local time. This is when I would work very active on trading. This is where I would work very active. So let's go back to the what 15-minute time frame and indicate those times. So why is it taking so long? So guys, so we want to see anything from 7 a.m. right to 11 a.m. New York local time. So we are starting from 7 a.m. right here. Look at the timing here is New York local time. So to 11. So look at this time interval. This is where a high probability setup will form. And if you look at back into the table, you see that, okay, there is another time there. So look at it. So the other time that this pair is what I called it what afternoon push. That is anything from 2 p.m. to 5 p.m. New York local time. So if you go to 30 minutes, um you literally see this from, look at anything from 2 a.m. Look at 3 a.m. So to 5 a.m. Look at it. Look at it. Literally anything from here to here. You see that. So the momentum is very, very what, okay. So the volatility is very okay on these times. So the time is back test. We back test everything and it works well. So mind you, I told you that the timing differ from volatility to step indices or boom. So they have this different timing. So then don't take this timing for boom and crash or step indices. No, this time is purely for volatility indices. So it can be V10, V25, V15, VTAC, any volatility pairs or indices or index. So, and I think this is all. You just need three things. You need three things: high time frame key candle, mid time frame liquidity, and you need time. So once time is involved, I'm now hunting for what? A lower time frame algorithm change in state of delivery. So this kind of change of delivery here is literally you can't, really master for now. But I show you that your trend line here at this point, your trend line or anything will work. Look at it. So those trend line traders, you can take your entry from here. So I'm showing you how to build a consistent or a very, repeatable or highly, how do I call it? So anything, this is how to build your trading model. So I have shown you several models on my previous YouTube videos, and now this is another was secret models. So you just need three things, right? So there's no fancy line or trend line. No, I just need three things. So I need high time frame key candle, mid time frame liquidity, then timing. And after that, I'm looking at whatever entry criteria you want to use, whatever you want. It can be support and resistance, anything you want to use, guys. So anything you want to use. So if you're using support and resistance, you can have one here. So you have one here. Once it is broken, just sell. Your stop loss will be here. So, but for me, the way I approach market is different from the way you want to see it. So, because we can't be doing the same thing, right? So I think this should be all for this video. If you like to see more content like this, make sure you subscribe, like the video, and comment what you want to see next. So on the next episode, I'll dwell more on other indices pairs. So until then, talk to you soon.